Hello, this is JC De Guzman for the Top 5 Gainers and Top 5 Losers analysis for April 29, 2019. The 10 stocks that I'll be talking about today are SSI, ISM, CHP, Mega World, AEV, PHEN, Green, Chelsea Logistics, DMC, and the last one is IMI. So I'll give you my technical analysis and then you'll hear my overall sentiment followed by my recommended plans of actions or trade setups. Let's begin with SSI. So SSI closed on Monday at 3 pesos per share. Support is at 2.84. The resistance is pegged near 3.12. If it breaks out above 3.12, it will make 3.41 as the next resistance level. So last Monday's green candlestick closed above the VWAP of 2.95. So that's a bullish signal aside from the green color of the candlestick. And this was also matched with the volume that's above its 10-day volume average. Foreign investors also bought about 23 million pesos worth of shares, and they have been buying. These foreign investors have been buying for the past, consistently buying for the past 5 trading days. MACD remains bullish. I don't see any formation of a bearish convergence with a signal line. On the other hand, RSI is already trading inside the classical overbought level. That will affect my recommendation later and my overall sentiment as well. Okay, so as far as the criteria that we're looking for are concerned, my overall sentiment on SSI is bullish, but factoring in the fact that RSI is already inside the classical overbought level, I would advise that you consider locking in a few tranches. It doesn't have to be all of your shares, just to be on a safe side, so to say. Lock in some profits to as close as 3.12. Now, if the stock continues to go higher than 3.12 with support coming from volume, then you can still either hold your position or add more shares within the most voluminous and most traded range. Okay, if you don't know how to do your own trade volume distribution analysis, you can always post a request inside our private clients forum and I will gladly do that for you. Okay, so my overall sentiment is bullish, and my recommendation for those who have SSI is to consider locking in some profits near 3.12. If you don't have SSI yet, you can do a test buy within the most voluminous and most traded range. Okay, for the next one, we have ISM. ISM closed on Monday at 5.77. It registered a gap. It gapped up from last Friday's closing of 5.06, and then it opened on Monday at 6 pesos per share. So that was a gap up. There was a gap registered right here. And regardless of whatever catalyst influenced this gap up on the price of ISM, what we know here is that if you are still familiar or if you are still on top of my 10 SMA MACD combo when it comes to spotting a buy signal, that buy signal already appeared as early as April 11. That was the time when MACD crossed above the signal line right here, and the price also went above, continued to go higher than the 10 SMA. So if you entered a new position last April 11 and applied a risk tolerance percentage of at least maybe about 4 or 5%, you would not be wiped out too early. You won't be wiped out too early from the game if you entered a new position on April 11 with a risk tolerance percentage of up at least 5%. So if you are consistently testing or maybe following my 10 SMA MACD combo, you would have also benefited from this gap up on the price of ISM. Okay. However, let me remind you that not all stocks with a MACD that crosses above the signal line and with a price that moves above the 10 SMA always perform. Not all of them perform all the time as expected. Okay, sometimes even though the MACD is already moving above the signal line and the price crosses above the 10 SMA, sometimes after a day or two, the price dives again towards its nearest support level, and it does not uh, move in accordance to what we expect, uh, where we expect it to go. So nonetheless, the the percentage of success of following the 10 SMA MACD combo is definitely higher based on my own backtesting. It's the ratio of winning is higher than the ratio of the chances of losing. Okay, um, it will only be risky if you entered on uh, those stocks that that belong to those chances of losing. For example, if out of 100, the 10 SMA and MACD combo has 10 chances of losing, it will only be unfortunate for you if you traded first those stocks that belong to those 10 chances of losing. So that's the only risk. That's the risk in following the 10 SMA and MACD combo. So, and that's the reason. By the way, that's the reason why we are not just relying on the 10 SMA and MACD combo. Right? You've been hearing me over and over again about those 4 criteria that we want to check. It's some sort of some sort of getting a second opinion from the other indicators if it's really a go or no go signal. And what are those 4 indicators, or what are those 4 criteria? First, it should be a green candlestick. Second one, the last price should be above the VWAP. Third one, volume should be at least above the 50% of the 10-day volume average. And the last one, the most traded and most voluminous range should be closer to the intraday high than the intraday low. Okay? And remember those 4 criteria aside from our 10 SMA and MACD combo. Now, going back to ISM, ISM closed at 5.77 and VWAP was at 5.91, and support is near 5.21, resistance is near 7.36. Volume was higher than the 10-day volume average. It's a red volume bar because the selling pressure was more dominant than the buying pressure on Monday, despite the gap up. Okay, so when there's a gap up and you see red volume bars and red candlesticks, it means to say that the traders are either eavesdropping with each other still, or they don't see a bigger reason why why the price should continue to go higher and not to fill the gap down, and not to gap down the next day or two. Okay, so there you go. MACD, by the way, remains bullish. Of course, we can expect MACD to bend down just because of the red candlestick on Monday. It's still a gap up. Besides, MACD does not depend on the color of the candlestick but on the price movement, historical price movement. ISM managed to close higher than its 3 simple moving averages, but this gap up is inorganic. It's not natural. So there's a chance. There's the risk of filling this gap down. So that's the risk after a gap up. Okay, it might gap down. It might fill the gap. It can fill the gap. Okay, depending on the prevailing sentiment of the traders. So it's very important that you monitor the price movement, and you know how to do trade volume distribution analysis like how I do it. Okay, so for those of you who still have ISM, there's no better advice than telling you to respect your trailing stop loss. And if you don't have ISM, don't hurry. Make sure that those four criteria that I mentioned a while back are present before you do a test buy. Then when they are present, don't do a test buy at whatever price. It should be within the range that got the most volume and the highest number of trades. So my overall sentiment on ISM is neutral to bearish. Okay, neutral to bearish. I'm expecting uh, this gap to be filled down. Okay, so you've heard my recommendation as well. So moving on to the next stock in the list, we have CHP. CHP closed on Monday at 2.07. Support is at 1.81. Resistance is near 2.21. The last price was above the VWAP of 2.07. It also got a green volume above its 10-day volume average. Foreign investors, on the other hand, they sold about 23 million pesos worth of shares. On Monday, for 2019 year-to-date, they remain bearish. MACD remains bullish above the signal line. And did I already say that the last price of CHP is already moving above the 10 SMA? So there you go again for the 10 SMA MACD combo. Okay? Now, my overall sentiment here remains bullish on CHP. For those who have CHP, I suggest that you also consider locking in some profits near 2.2 or 2.21 to be precise. Okay? Now, if it continues to go higher than 2.21 with volume above its 10-day volume average, then you can use the sold price or the sold amount to buy additional shares, or maybe just to hold on to your position and let CHP do its thing, and then sell once your trailing stop loss is hit. Now, if you don't have CHP, you can do a test buy provided it's within the range that got the biggest volume and the highest number of trades. Okay, there you go for CHP. Next, we have Mega World. MEGG closed on Monday at 5.73. It managed to break out above its previous resistance at 5.61. And it's now acting as its current support. And the immediate resistance is pegged near 5.86. Okay, 5.86. It's now moving above its 10-day simple moving average, and the last price on Monday was above its VWAP of 5.65, another bullish signal. Volume was also bullish as it was registered higher than the 50% of its 10-day volume average. Foreign investors, on the other hand, did not have it as they sold about 6 million pesos worth of shares. And they remain bullish. They are bullish for 2019 year-to-date. MACD remains bearish below the signal line. However, I'm already seeing a formation of a bullish convergence with the signal line, courtesy of the green candlestick last Monday, or just Monday this week. Okay. Now, if it breaks out above 5.86, I'm sure you'd like to know what's above 5.86. So let me zoom out the chart and drag it a little bit to the bottom so we can see the 61.8% up Fibonacci extension. And the next resistance above 5.86 is pegged near 6.33. Okay? My overall sentiment on MEGG remains bullish. Respect your trailing stop loss. And if you don't have MEGG and you'd like to enter, for the short term, make sure you do it within the range that got the biggest volume and the highest number of trades. Okay, there you go for MEGG. Next, we have AEV. AEV closed on Monday at 56.8. Immediate support is at 55.62. Yes, it managed to regain its position above that level on Monday. Resistance is at 60.97. Let's make that 61 pesos per share. The last price managed to move higher than the 10 SMA on Monday. However, it's still below the 50 SMA. So in the short term, this can be considered as a sideways sentiment for AEV in the short term, while it's bullish in the long term. Nonetheless, as far as Monday's price movement is concerned, this green candlestick was matched with a bullish volume that was above the 10-day volume average. On the other hand, foreign investors sold about 35 million pesos worth of shares on Monday. Foreign investors, they remain bearish for 2019 year to date. While MACD remains bearish below the signal line, I've already seen a formation of a bullish convergence with the signal line. So meaning to say, if the price of AEV maybe goes higher than or inches closer to 58 pesos per share, maybe that's the time when we will see MACD touching, if not crossing, above the signal line. So my overall sentiment on AEV is bullish, and this, I think, you still have a better reward to risk ratio, especially that AEV has just broken out above its previous resistance level, which is now acting as its support level, which is 55.6. So if you'd like to trade AEV, do a test buy within the most voluminous and most traded range. Okay, I am bullish on AEV. Next, we have PHEN. PHEN closed on Monday at 1.57. It managed to break out from its previous resistance at 1.5, which is now acting as its immediate support. Its immediate resistance is now near 1.64. That green candlestick also crossed above the 10 SMA and above its VWAP of 1.52. PHEN is already bullish in the short term and in the long term. On the other hand, MACD remains below the signal line, but just like the previous stocks, I've already seen a formation of a bullish convergence with the signal line. Maybe if the price draws closer or crosses above 1.64, we will see MACD touching, if not crossing, above the signal line. Okay, volume was also bullish as it registers maybe 95% of its 10-day volume average. But there's not much that we can say or we can factor in from the sentiment of the foreign investors, because they only register some flimsy transactions on PHEN. Okay, so my overall sentiment on PHEN is bullish. If you have PHEN, since we are already near the the latest historical resistance, consider locking in some profits at near 1.64 or 1.65 or maybe 1.70. Consider locking in some profits on that level, because the next historical resistance is so far dated January 2018. Yeah, somewhere near 1.9. So might as well, if I had PHEN, I would consider locking in some profits near 1.64. So for those of you who are tempted to do a test buy on PHEN, calculate your reward to risk ratio. Okay, you can say your support is 1.38 or maybe 1.5, and your resistance is at 1.64. Read the quick start guide. I documented a formula there on how to calculate your reward to risk ratio. I repeat, it's reward to risk ratio, not risk reward. Okay, because some other books, they call it risk reward, and I call it reward to risk. Whichever the case, it's also correct. Okay, the only difference there would be on the equation, on the formula. Okay, so but mine is reward to risk ratio, not risk reward. Just want to be clear on that. Okay, so there you go for my bullish sentiment on PHEN, with some reservations and recommendation to lock in some profits near 1.64. Once it touches 1.64, still with volume, maybe that's the time when we can decide to add more shares, or maybe just hold our position until our trading stop loss is hit. Now, for those of you who would like to test buy on PHEN, factor in the reward to risk ratio. Are you happy with the reward to risk ratio, knowing that I have some reservations or some I have a recommendation to lock in some profits near 1.64? Take note, PHEN is already at 1.57. If you're happy with the reward to risk ratio, with your reward to risk ratio, then you can do a test buy. Not at any price, but within the range that got the biggest volume and the highest number of trades. Always, always, always. Okay? Next, we have green. Green closed on Monday at 2.6. Support is near 2.25. Resistance is near 2.90. Green, although green soared above, rose above its VWAP of 2.53 on Monday, it's still below its shorter term moving averages, 10 SMA and 50 SMA. And the intersection or the confluence between those two SMAs that I've mentioned seems to agree where the immediate resistance is spotted at 2.90, near 2.90. Okay, so this green candlestick was also matched with a green volume bar that was above its 10-day volume average. MACD, on the other hand, is already below the signal line. It was because of the 3-day or 4-day descent in price of green. Now, maybe if green will inch higher than 2.60, maybe up to 2.70, we might see a formation of a bullish convergence between the signal line and MACD line. But that's a conditional clause. Okay? You heard the word if. Okay? Now, if you, my overall recommendation for, or my overall sentiment for green is a neutral to bullish. Neutral to bullish. I think, or maybe I can change that neutral to bullish to sideways. I think based on the previous price action of green, there's a high probability for green to just trade sideways between 2.25 and 2.90, unless, another conditional clause, unless we will see a consistent volume above its 10-day volume average as it inches closer to 2.90. But if we're going to see volume going up and down the 10-day volume average as it moves up, then I will stick to my previous sideways sentiment on green. It might just move sideways between 2.25 and 2.90 if we don't see a consistent daily volume above its 10-day volume average. Okay, but that's just that's a conditional clause. Okay, so my overall sentiment is a sideways on green, and my recommendation is to, if you have it, lock in some profits near 2.9. If you don't have green, again, calculate your reward to risk ratio. Consider your entry price, it's a variable, and 2.25 and 2.90 for your reward to risk ratio. If you're happy, do a test buy within the most traded and most voluminous range. Again, if you don't know how to do trade and volume distribution analysis, I'm just a post away from our private clients forum. Okay, moving on to the next stock in the list, we have Chelsea. Chelsea closed on Monday at 5.89. Unfortunately, that was below its VWAP of 5.98. It made an attempt to break out above its immediate resistance near 6.16, but it did not materialize as it retreated at 5.89. Intraday high was at 6.29, closing price was 5.89. Immediate support is near 4.55. The last price is already closer to its resistance than its support level. So the ascent in price, which also registered a gap, it gapped up. Okay, it gapped up. Okay, if you remember the chart of ISM, I think you know the common denominator. Okay, ISM. Now, the ascent in price was also matched with the bullish volume obviously higher than its 10-day volume average, but foreign investors did not have it, as they what? Foreign investors sold about 2 million pesos worth of shares, just an insignificant amount, so to say. So MACD remains bullish. If you are still holding your position on Chelsea, by the way, the 10 SMA and MACD combo became true last Friday. Was it Friday 26? Let me double check. Oh yeah, last Friday. Okay, so if you manage to buy near 5.37, make sure that you lock in your profits once your trailing stop loss is hit. Now, if you are a new entrant on Chelsea, let's say you bought yesterday within the most traded and most voluminous range, make sure that you consider locking in some profits as well near 6.16, or simply follow wherever your trailing stop loss is. Okay, in our revised quick start guide, I documented or said something about preempting a trailing stop loss. Preempting a trailing stop loss means selling even before your trailing stop loss is hit. Now, that requires experience aside from some indicators or criteria that we need to consider. So just check our quick start guide, read the entire thing, so you will know about this preemption technique that I'm talking about. My overall sentiment on Chelsea is neutral to bullish, and my recommendation, I gave you my recommendation already. Okay. Now next we have DMC. DMC closed on Monday at 11.74. No, not 11.74, but 11. Oh yeah, 11.70. No, let me double check. 11.80. Okay, 11.80. It's still below the 10 SMA. I still see a perfect bearish alignment between the three SMAs of DMC. But the ascent in price was above the VWAP of 11.66, and it registered a bullish volume that's above the 50% of the 10-day volume average. Foreign investors sold about 7 million pesos worth of shares. I see a formation of a bullish convergence with a signal line, even though MACD is still below the signal line. So support is near 11.17, resistance is near 11.97. We can call that 12 pesos per share to round it up. My overall sentiment on DMC is it's actually sideways. I think it will just move sideways between 11.17 and 12 pesos per share. So if you have DMC, for those of you who entered when the 10 SMA and MACD combo recently appeared, by now you should be out of DMC already by now. Well, of course, depending on your percentage of risk tolerance. But if you are like me, who apply about 3%, 5%, 7%, 10% max on short-term trading, I'm most likely out of DMC by now. Okay, now if you'd like to do a test buy, again, ask yourself, am I happy with the reward to risk ratio as far as the position of the immediate support and resistance and my entry price are concerned? If you're happy, do a test buy within the most voluminous and most traded range. If you are half-hearted, mean to say your conviction isn't that high yet to do a test buy, so postpone the plan to do a test buy. Okay? Make sure that you check your data and don't just base everything on what you feel, on your emotions. It's okay. I'm not telling anyone to learn how to ignore emotions. We cannot do that. We are emotional beings. Okay? Unless I'm speaking with Cyborg, we cannot totally remove emotions, from our decisions, whatever type of decision it is. What we can do is to minimize it, neutralize it by being data driven, just like what we do here. Not only are you listening to to my analysis, you are also seeing what I click, what I see, or what I'm talking about. So by doing this, I'm helping you neutralize, okay, have a data-driven decision, not just an emotion-driven trade decision. So my overall sentiment on DMC is sideways, neither bullish nor bearish. And my recommendation is if you still have DMC, if you have a big percentage of trailing risk tolerance on DMC, make sure that you cut your losses once your TSL is hit. Don't let it go below 11.17. Otherwise, you'll have to say hi to 9.9. It's quite deep, the next support level. Okay, keep that in mind. Now, if you don't have, I already told you what you should do if you are planning to do a test buy on DMC. Okay, last but not the least, we have IMI. IMI closed on Monday at 11.22. It was below its VWAP of 11.54. It also dove below all of its 3 SMA. So it's bearish in the short term and long term. And that descent in price was also okay with the bearish volume above its 10-day volume average. Meaning to say there was traders of IMI were really convinced that it was about time to sell down on IMI because of this volume. On the other hand, foreign investors liked it. They seemed like it, right? They liked it because they bought about 24 million pesos worth of shares. So these foreign investors, sometimes they just base their buying decisions on, on certain support levels, just like some investors on the MSCI index. But that's another topic. Okay, so here, on the other hand, IMI is already inside the classical oversold territory. It's just about 2 points away from entering the classical oversold territory, IMI. So my recommendation, I am bearish of course on IMI, and my recommendation is to wait for a pullback to as close as 9.8. Once it draws closer to 9.8, do another trade and volume distribution analysis. Watch out for those 4 criteria if they are present. If those 4 criteria are present, that's a go signal for you to do a test buy. You don't have to wait for MACD to cross above the signal line and for the price to go higher than the 10 SMA for as long as those 4 criteria are present. Okay? So there you go for my top 5 gainers and top 5 losers analysis for April 29, 2019. Actually, the last 5 are not really losers because I decided to get more top 5, I think get top 8 gainers and top 2 losers because the top 3, 4, and 5 losers did not get that much total turnover value, not much volume. So I'd rather give you an analysis to those stocks that have no volatility or liquidity issues. Okay, you will the chances of making money is higher on stocks that have no liquidity issues. So there you go. My name is JZ De Guzman for the top 5 gainers and top 5 losers analysis. May you have an independent, data-driven, and hopefully a profitable trading day ahead. If you have questions, please post them in our private clients forum. Have a good day.